Today's video is going to be very interesting, where I discussed about correspondent banking, correspondent account, cross-border transactions, sanction screening, shift message. So if you're already working in payment screening or cross-border transactions with respect to sanctions, this video will be very helpful to you, where I discuss the background work. If a person, X person sends payment from US or from Canada to from another person in Y in India, what were the parties involved, how the payment flows from Canada to India, and what are the banks involved. So the background work of the cross border transactions I have discussed in this video. So it will be, if you're already working in this genre, it will be very helpful to you. So, and it will be very interesting, and as the concept involves many topics, this video is going to be very lengthy. Be patient, and do not skip the video if you want to understand the overall scenario. And in any part of the video, if you feel this video is very helpful to you, please hit the like button. And if you do have any comments in any part of the video, you can drop down in the comment section, and I will be very helpful to answer all your queries. uh, Before we get into the actual concept, we have to know certain facts and also the terminology, which will help us better understanding of this topic. So the first one is about the US bank, uh, and the second one is a foreign bank. And what is an US bank and what is a foreign bank? The simple definition is, because okay, first, what is an US bank? US bank is a bank where its headquarters is in US. If a bank headquarters is in US, it is becomes an US bank. And if any bank, the headquarters is outside the US, it is called a foreign bank. Let it be whatever the terminology you use in your organization, or what are the terminology you already know, keep that terminology aside. But in this perspective, in this correspondent banking or cross-border transaction, which we are going to discuss further, the main terminologies involved US bank and foreign bank. We'll connect that to correspondent banking later with an example. But US bank is a bank which has headquarters in US, and a foreign bank is a bank which has headquarters outside US. It is very simple thing to memorize. And the third one is, and 84% of the world uses USD currency, which is widely accepted. And why USD is widely accepted, we can discuss in further coming videos. It is related to US Patriotic Act. And 4% of the entire world uses CNY, Chinese N. So these are the mostly widely accepted currencies. One is USD, where 84% of the world uses the USD. So we are only discussing the entire concept in the perspective of US bank. So it is uh, advised to know what is a US bank and what is a foreign bank. I just want to repeat it again. An US bank is a bank which has headquarters in US, and a foreign bank is a bank which has headquarters outside the US. Why I am stressing it? Because the entire concept runs with these two main terminologies. In order to discuss correspondent banking, we need a cross-border transaction. In order to discuss a cross-border transaction, we need an example. So we'll discuss the whole concept with an example. I'll just share my screen. I'll just want to show some demonstration examples, so which you can easily adapt to your real-time scenarios. We'll shift into the screen mode. Uh, for the better understanding of the concept, we have moved into an example. You can see on the screen, two persons are involved, person A, person Y. Person A from Canada wants to send 100 Canadian dollars to a person Y in India, and person A has a bank account with RBC, Royal Bank of Canada, and person Y holds a bank with HDFC. For example, person A wants to send some 100 Canadian dollars to a person Y. He obviously reaches to his bank RBC. So now RBC will ask certain details before it proceeds with the payment. So the details involve Here, before we get into the details, there are two parties involved. Let it be the sender or the receiver. In banking terminology, in banking space, we use originator or the ordering customer who sends the payment, which is called remitter, or who initiate the payment. So person A will be the originator or ordering customer, and person Y becomes will be the beneficiary. So before RBC facilitate the transaction, it asks certain details from the person A about person Y. So the details will be name of the beneficiary, address of the beneficiary, on place of birth, date of birth, and what is the purpose of transaction, what was the relationship with the beneficiary. Apart from this, it also asks IBAN, international bank account number, and also big code, big code of the HDFC. So once person A collect this information and gives to RBC, RBC will initiate the transaction. But in order to initiate the transaction, uh, it can't directly send Canadian dollars to HDFC Bank, because HDFC Bank will say, I only accept USD dollars, not the Canadian dollars, because USD is widely accepted, as we all seen in the beginning of the video. 84% of the world uses USD, so it is obvious that HDFC Bank will also ask for USD dollars. But RBC Bank, the Royal Bank of Canada, doesn't have USD dollars because it is a Canadian bank. So now RBC will reach to JP Morgan in order to facilitate this transaction, in order to get the dollars. So now what JP Morgan will do? Why only JP Morgan? Because beginning we have seen the two terminologies, US bank and also the foreign bank. US banks are the banks which have headquarters in the US, and foreign banks are the bank which have headquarters outside the US. So in this case it is very clear, JP Morgan will become the US bank as they have headquarters in US bank, and Canada, this RBC will become the foreign bank. I'll just mention RBC as a foreign bank. Now RBC is the foreign bank and JP Morgan is the US bank. And as JP Morgan has a headquarters in US, it becomes the US bank. And now they cannot now RBC can't directly go to JPMC and ask, okay, you can send $100 to India. So they cannot directly send. When RBC reaches this JP Morgan, and JP Morgan will ask, you have to open a correspondent account in order to facilitate this transaction. When JP Morgan asks Royal Bank of Canada to open a correspondent account, now JP Morgan will become the correspondent bank and RBC is the foreign bank. So now correspondent bank is the bank which can provide correspondent account. All US banks cannot provide correspondent account, because only the top banks in US can provide the correspondent account. Why only top banks? Because the US government wants to keep a track on their currency, who is using their USD currency. So the license will be given to only the top banks. If you want to know like what are the top banks can offer correspondent account, you can just Google it, showing the top banks in US in Forbes magazine. So you can see on the screen, largest banks in the US 2024 given by the Forbes. So these are the banks which can provide correspondent account to the foreign banks. You can see the headquarters, it will be in the US. JP Morgan, Bank of America, Wells Fargo, Citibank, these are the banks which can offer correspondent account to the foreign banks. Why only this? Because the US government wants to keep a track of their currency, who is using their currency. Getting back to the example, now JP Morgan will ask RBC to open a correspondent account. Now when it is decided to open the correspondent account, RBC will definitely become the customer for the JP Morgan. Once RBC becomes the customer, they have to do their KYC checks before giving a correspondent account, like how we do for individuals, entities. Even though in the same way, even the banks also do KYC checks before providing a correspondent account. So in order to do that KYC checks, they need certain details. It is same how the risk assessment is done for the an individual or entity. We have already discussed. There are the four factors how a risk assessment is made, which is already discussed in the previous video. In the same way, there are certain criteria where JP Morgan will ask Canadian bank to provide. The details include, now to open a correspondent account, the JP Morgan will ask certain details like shareholding structure, KYC and AML program, like what sort of KYC and AML program that RBC is following, because they want to know the credibility of their policies. AML program will all involve policies, procedures, and control. In detail, I already explained what is an AML program. In detail, I already explained in the previous videos. It is like simply nothing but AML program is a program which involves the policies, procedures, and controls of a bank. And AML training, what sort of training that bank RBC, that Royal Bank of Canada, is providing their employees. They want to know because they just want to check the credibility of their policies. And on any senior management is a PEP, they want to know. And also, apart from these details, they also give a questionnaire which has 100 plus questions, which is called CBDDQ, correspondent banking due diligence questionnaire. And this question has to be filled by the RBC before opening a correspondent account. Now once RBC has given all these details to the JP Morgan will again uh, do the risk assessment, KYC checks, due diligence, and give a risk rating to the RBC before opening correspondent account. For a suppose we assume that all the checks were met by the RBC and they successfully opened the correspondent account in JP Morgan, and the risk rating is low, and they got the correspondent account, and the risk rating is given as low risk. Now RBC got the correspondent account and it also got the risk rating is very low, so they can easily do business with JP Morgan. But before they start doing business with JP Morgan, they have to, because I have simply opened an account, that doesn't mean it simply stays like that. I have to deposit certain amount into that, because any bank account, that is the main purpose of any bank account is to transact money, to you need to transfer money from one country to one country or one person to another person. In the same way, now RBC has to deposit certain amount in the correspondent account. So for example, we take it deposited 1 billion account, $1 billion. So $1 billion. Now RBC has in their correspondent account $1 billion. Now RBC has account and RBC also has a money. Now it can directly initiate the payment. So and RBC has also the details of the receiver, the bank account, the IBAN number, and the big code. So it can initiate the transaction. But before it initiate the transaction, it is a regulatory mandatory requirement to do sanction screening before initiating the transaction. So now the RBC conducts sanction screening on this transaction before it proceeds with the JP Morgan. So we assume that RBC have conducted the sanction screening and it feels that it is safe from the sanction risk. There is no sanction risk, and RBC felt this transaction is safe. Then it can then it can send a message to the JP Morgan stating that please deduct $100 from my correspondent account and send it to HDFC Bank. So this message will be sent in a because now once the sanction screening is done, RBC have to send two messages. One is MT103 and MT202 cover. which is from sanction screening through shift message, and if they feel that transaction is safe and it is risk free from sanctions, it initiates that it sends a message to both HDFC and JP Morgan in the form of shift message type, which is called shift MT, and two messages, which is MT103 and MT202 cover, and RBC will send MT103 to HDFC stating that you will receive the funds in next 4 to 5 days. At the same time, at the same day, it also sends MT202 cover to JP Morgan as saying to deduct $100 from my correspondent account. They already have correspondent account with $1 billion, so it sends MT202 cover to JP Morgan asking to deduct $100 from my correspondent account and credit to HDFC. Now the part from the RBC has done, because RBC have done the sanction screening, which is mandatory, because that is a regulatory requirement for all the cross-border transactions. If you are initiating the payment, even before the payment is initiated, a sanction screening has to be performed, and RBC has performed the sanction screening, and it feels that it is sanction free and there is no risk of sanctions, and it sends two messages, MT103 to HDFC and MT202 cover to JP Morgan stating that deduct $100 from the correspondent account. At the same time, the RBC will send two messages at the same time and the same day. Now once JP Morgan receives the message, they cannot straight away accept the message and deduct the $100 from this and directly send to HDFC. No, even they also, JP Morgan also perform sanction screening before accepting this $100. Even if they feel, even they perform the sanction screening, and if they feel this sanction this is free, I mean this the transaction is sanctions risk free, then they can initiate they can release the payment to HDFC. But in any case, if JP Morgan feel that this transaction has a sanctions risk, then they will get back to the RBC asking for certain details, like we request some details because the transaction message type is not clear, where the purpose is not clear, and it involves some high risk name. So it get back to the RBC asking that I need the required details, and if they feel that it is exactly a potential risk to sanction, they'll block the transaction and send and they don't accept this $100 payment, so the transaction will be blocked. And if they feel that we need more information, they'll request back to RBC asking that we need the following details in order to accept this $100 request. For suppose we assume that in this case JP Morgan have performed the sanction screening, and also they feel that this transaction is very safe, so they can release the payment to HDFC through a SWIFT message which is called 910. See here, the sanction screening is performed two times. One is performed by RBC, and next one again JP Morgan will second time will perform the sanction screening. So now after JP Morgan perform the sanction screening and it feels that okay, this transaction is safe from the sanction, then they'll release the payment to HDFC through a SWIFT message called MT910. MT910 is issued by the JP Morgan. It is issued to HDFC. Okay, once HDFC receives the payment, it cannot directly accept the payment, because even HDFC has to perform sanction screening before accepting the payment. So even HDFC also does the sanction screening before accepting the $100 payment, because every one cross-border transaction is being performed at sanction screening three times. One is with the foreign bank, one is with the US bank, which is correspondent bank in this case, and one with the beneficiary bank. So one transaction will be performed sanction screening three times. But before we think about HDFC accepting the dollars, now see in this case RBC has a correspondent account in the JP Morgan, so they gave a debit advice or debit notice asking that deduct $100 from the our correspondent account. In the same way, HDFC also have a correspondent account in the JP Morgan. It has to open in order to accept the dollars in the same way how RBC opened a correspondent account. HDFC also opens a correspondent account. The process is same. What we have discussed for the RBC, it is same for the HDFC. Let us assume that they have the correspondent account already. They followed all the rules. And HDFC also has a correspondent account in the same JP Morgan. So it will be easy for the JP Morgan to facilitate the transaction. Now, okay, now JP Morgan has performed a sanction screening and it initiated the payment to HDFC. HDFC also have the correspondent account in JP Morgan. It will be very easy. It will be very easy, and is the correspondent banking also has $1 billion. Now JP Morgan will add $100 to the correspondent account of HDFC, and it also HDFC also has a correspondent account with JP Morgan. So JP Morgan sends a payment. It sends a message type, not the payment. It sends the message type stating that I'm crediting $100 to a correspondent account. But soon after the HDFC receives the payment, it will not directly accept it, even though HDFC also performs sanction screening, and also is one more process HDFC will perform, which is called wire stripping. And okay, first we'll discuss about sanction screening. When HDFC done the sanction screening and it feels the payment is safe, but it doesn't accept the payment because it also performs one more process called wire stripping. So what is mean by wire stripping? Wire stripping is a process where the message type, we have seen that RBC will send a message MT103202 and JP Morgan will send 910 message like which state that okay, release the payment or accept the payment. The instructions basically which contains the details. In this case, wire stripping is the process of either changing or deleting or adding the message information in the message. This is called wire stripping. So why wire stripping is done? Because in some very rare case scenarios, message, for example, this MT10 has certain fields. We'll see the MT103 fields and we'll compare that MG103 fields to our example. Then we'll come back to wire stripping, so it will be easy for us to understand what is wire stripping. So we have seen RBC will send MT103 HDFC stating that your funds will be created in next 4 to 5 days. So now what is MT103? MT stands for message type. So this is before we discuss about wire stripping, it is necessary to know MT103, the fields, what are the fields involved in the MT103, and so that we can apply the fields to our example. It will be easy for us. We can easily understand the whole concept. So if you look into this, these are the MT103 message, MT103 shift message. These are the various fields involved in the MT103. So we'll look into one by one. We'll compare this shift MT103 with the example we have taken. So 20 field 20 says transaction reference number. Transaction reference number is a unique number which is given to each and every transaction. And bank operation code, it is a branch code in which from which branch from which bank the transaction has been initiated. It will be different from bank to bank. And 32A is the value date, currency, and interbank settlement amount. So in short, we'll know that we can tell it as it is the date in which the payment is going to be created, or within what time the payment will be created. It is a value date or settlement date, the date in which the payment will be settled to the beneficiary. That will be in the field 32A. And 33B is the currency, or the it is the currency in which currency the payment has been initiated. These are the important fields. 50A, F, or K. 50A states about the ordering customer, the payer. In our example, the ordering customer is person A. 52A or D, ordering institution. In our example, ordering institution is the payers bank, which is RBC, Royal Bank of Canada. 53A, Senders Correspondent Bank. In this case, Senders Correspondent Bank is the JP Morgan, because they have the correspondent, RBC has the correspondent account with the JP Morgan. So it is the Senders Correspondent Bank, which is JP Morgan in our example. 54A, Receivers Correspondent Bank. It is in our example, JP Morgan is the Receivers Correspondent Bank, where both HDFC and RBC has correspondent account in the same bank, which is JPMC. In our example, 54A field Receivers Correspondent Bank is also JP Morgan. 56A is the intermediary bank. We can discuss more about what is an intermediary bank. In our example, intermediary bank is not involved, but in real time scenarios, mostly intermediary banks involved, because as we discussed, not every US bank has that authority to issue correspondent account. So we'll discuss that what is intermediary bank in the upcoming videos. In our example, there is no intermediary bank. And 57A, account with the institution, recipient's bank. In this case, the recipient's bank is the HDFC. And 59 or 59A, a recipient. In our case, the person Y is the recipient or the beneficiary. And field 70, payment reference. It actually tells about details of payment or purpose of payment. 71A, the charges. For example, we have seen the currency is converted from Canadian dollar to INR, so it involves some charges, currency conversion charges. So it will be in the field 71A. And field 72, sender to receiver information. It is the relationship, actually the relationship with the beneficiary, the ordering customer, what kind of ordering customer has a relationship with the beneficiary. 77B, it is the regulatory reporting. So the regulatory wants to make certain details in the payment SWIFT message, so they will input this in the 77B. This is our overall about MT103. These are the fields that will be in the MT103. Why we are discussing? Because these are very important to know, to know the concept of wire stripping. Because coming back to our example, we have seen RBC also performs sanction screening before they initiate the payment, and also JP Morgan also performs sanction screening before they release to HDFC Bank. HDFC straight away it won't accept the payment unless it performs sanction screening along with wire stripping. Sanction screening, we already know, it is a screening process which checks the risk of sanctions. And wire stripping is a process where the HDFC or the beneficiary bank checks, is there any change or any addition or deletion of SWIFT message, so that they can make sure. Why people change the SWIFT message, or why? Because there might be chances that RBC can change the SWIFT message or JP Morgan can change the SWIFT message. We'll discuss that changing the SWIFT message or addition the SWIFT message or deleting the SWIFT message with a very very small example. We have, for example, in this case, our customer concept of wire stripping with an example. we now all know voice stripping is the process where the banks, not all banks, were a very rare case scenario. Some perform intentionally, sometimes it happens. Voice stripping is nothing but changing, adding, or deleting the shift message type. So, for example, if we see the RBC will send one shift message to HDFC and one shift message to JPMC, and in the same way, JPMC will send one shift message to HDFC. So, there are the chances of changing the information in the shift MT103 or TO2 or 202. Why they do, we'll discuss with an example. For example, because that's the reason why HDFC additionally performs voice stripping. Uh, Apart from performing sanction screening. For example, in voice stripping, for example, we see this RBC and is sending $100 to a person Y in India. As to make our conversation very easy, we have taken the examples of A and Y. We'll discuss voice stripping with our real time scenarios. For suppose the name of the beneficiary is Muhammad Ibrahim. In the example we have taken Y, we consider that name of that Y name would be Muhammad Ibrahim. The name of the beneficiary is Muhammad Ibrahim. So RBC perform the sanction screening and it feels that everything is safe. Then it sends MT103 to HDFC. While performing the sanction screening is performed through SWIFT. So while performing the sanction screening, intentionally or maybe unintentionally, they might make some changes. For example, the name of the beneficiary is Muhammad Ibrahim, which is a very close match with a sanctioned individual, Muhammad Hikmat Ibrahim. People who are already working in the sanction screening or payment screening, or those who have experience in KYC or AML or screening process, they easily can understand this, because they know how the alerts will be generated. For example, our beneficiary name is Muhammad Ibrahim. It is a very close match with one of the sanctioned individual, Muhammad Ikmat Ibrahim. So it triggers an alert. So where in the shift we used to discount it based on whether name, like we have some certain categories. How can we discount a name? How can we make sure that our beneficiary and sanction individual are completely a different person? So sometimes what happens, intentionally or sometimes unintentionally, they change the shift message in order to bypass this sanction process. What they do, for example, RBC want to perform want to do this wise tipping in order to make the transaction bypass the sanction process. What they do, they just remove this Muhammad and they just mention the beneficiary name is Ibrahim. So you know what happened, the software or the tool, the shift cannot trigger an alert. So because the beneficiary here, the name is Ibrahim and the sanctioned individual is Muhammad Ikmat Ibrahim, so it is now not a very close match, it is just an Ibrahim, so it won't trigger an alert and the transaction directly bypass the sanction screening and it directly goes to beneficiary. So this is called by stepping. But what happens in this scenario, they have changed, then they have completely removed the first name and they have sent the MT103. They have performed shift through MT sanction screening through shift in MT103 and they have sent to HDFC. So this is what happened in case of wire stripping. But how HDFC will get to know that the wire stripping has already done? How do we do? Because sanction screening we have tools, so we can just we have tools softwares, we screen all the they enter the message types which triggers an alert and then we'll review it. Then based on the outcome, we either release or we either request for more information. We have that. But how do why HDFC come to know that the message is wide stripped? How they'll come to know? They can HDFC can detect whether the transaction is wide stripped or not by comparing the shift messages. We see here RBC have sent one shift message MT103 HDFC. In the same way, JPMC will also send same shift message to HDFC. By comparing these two shift messages, because the information will be the same, because we have seen what does the fields we have MT103. In MT103 we have seen the details of the beneficiary, the details of the recipient, the purpose of code and transaction difference. Mostly these are the fields which are likely to get altered or changed, because they cannot change the banking information, the correspondent banking or the receiver bank. Only the name of the originator or the name of the beneficiary or the address or where they are located. These are the areas where they were more tend to they more tend to wire stripping. So RBC has sent MT103 to HDFC, and JP Morgan also sent MT103 HDFC. So they can compare these two messages. If the information in the MT103 is exactly matching with the MT109, so the payment is safe. It was not wide stripped. If there is any change in this message, for example MT103, RBC have screened and have sent Muhammad Ibrahim, but JP Morgan have sent only Ibrahim, which means JPMC have done wide stripped. So in this way we can understand like how wide stripping can be done, or the payment is already wide stripped. This is HDFC, the ultimate beneficiary bank is HDFC. So HDFC, apart from sanction screening, it also performs wide stripping. This was the entire process of wide stripping. Sometimes, so for example here we have deleted Muhammad, sometimes they might add also. We can just mention as a Rahul Ibrahim. So the shift message is called wide stripping. So in the entire video we have learned what is correspondent banking, what is correspondent account, cross border transaction, sanction screening and shift message type, and also wide stripping. I hope you guys like this video. If you feel this video is very useful to you, or if you have learned something from this video, I request to hit the like button, and please do comment your opinion about this video. Or if you feel any part of this video is confusing, or you want more explanation, you can drop down in the comment section. I can do some dedicated video in the upcoming days. Thank you so much guys, thank you for the support.